Goldman Sachs, probably the most respected investment bank in the world, just dropped a warning that should terrify every single retail investor, certainly the ones in America. And what they're saying, it's not about the stocks. It's about the financial plumbing that's quietly breaking down underneath this AI revolution we're in the midst of. There's a 1.5 trillion funding gap, but that's not just it. The people who are supposed to fill that gap, they are collapsing. So in the next few minutes, I'm going to show you exactly what Goldman insiders are seeing, because this is not being shared with you, right? Goldman shares this with their institutional clients, the guys with billions of dollars who, well, need a leg up, clearly, whereas you and me are left in the lurch and left in the dark. Now, I read this information because I've got this guy here, Albert and Winston back there. They got great connections to Goldman Sachs research, and I believe that you deserve the same level of information that institutional investors have access to. Because right now, your retirement is at risk. And most importantly, you need to learn how to protect yourself and potentially profit from what's coming. This is not a doom and gloom video in any way, shape, or form. I want to show you the opportunity. If you're wondering who the heck I am, my name is Felix Prehn. Winston back there. This is Albert. I'm an ex-investment banker. These guys just sort of, hang about and make us all feel better. And I've seen how Wall Street really works from the inside. And I founded the Goat Academy, where we've taught over 20,000 students so far. I've co-founded TradeVision.io, where we give you access to the best data and news. And our mission here is very simple. Give every investor the same information that Wall Street uses to make money, and explain it in a way that actually makes sense, which is the important part. Now, what I'm about to share with you, Wall Street probably would like it that you don't understand it, because when you're confused, it's easier for them to make money. And this is not something that you're going to figure out on your own. It's just not going to happen. I mean, even these two brains back there, they're probably not going to figure this out, because it is just not intuitive. So here's what happened. On November 19th, this year, literally a day ago, probably a few hours ago by the time you're watching this, the head of Goldman Sachs' Delta One desk is a guy named Rich Privorowski. And he put in a note that should have made headlines. But it didn't, because most people don't understand what Delta One is, and they definitely don't understand what he was warning about. So let me explain this, guys. The Delta One desk at Goldman Sachs, these are the people who see real-time market flows. They trade derivatives, structured products. They see where the smart money is moving before anybody else does. And when the head of that desk issues a public warning, well, public to his customers, it's like a fire alarm. And you don't just stop to ask questions, you actually just pay attention. And here's what he said in our quote, and I've got the quote on the screen here, and you can see why mainstream media doesn't understand it. It says, while we're all laser focused on Oracle, CDSs, again, nobody knows what that means, NVIDIA, maybe what we should have been watching was OWL and COF. Clear as mud, right? So if you're like most people, you're thinking, Felix, what the hell does that mean? Well, let me translate it. Oracle? Well, that is Oracle, the company. Data centers, right? NVIDIA? Well, you know what NVIDIA is. And everyone's watching these two stocks, right? They're the sexy stocks right now. They're the ones making the headlines. They're the ones that, everyone's talking about. But OWL and COF, what the hell is that? Well, OWL is a company called Blue Owl. COF is Capital One. These are private credit companies, consumer finance companies. And according to Goldman, we should be terrified about these stocks. Why? Because while everyone's watching the penthouse party with AI stocks, the foundation of the building is cracking. And when that foundation goes, you remember 2008? Everything else comes down with it. Now, before I depress you here, I want to show you that on a miserable day like yesterday, the stock market looked like this, right? So heat my beer in TradeVision. You can get a free trial of TradeVision, by the way. There's a link down below. And then if I look at like one of my accounts here, says swap my watch list, you can see the stocks as a whole in there. And what do you see? Well, you see green numbers, right? Not huge green numbers. Well, actually, there's one that's 70% up. That's quite a big green number. And that's actually up a lot more. We did a video on that yesterday. And what I'm showing you is that on a miserable day, where Nvidia's down, Microsoft's down, Amazon's down, Tesla's down, Palantir's down, AMD is down, Crowd's down, everything is down. Well, not quite everything. And how am I in these stocks and not in some other ones that are down a lot? Not because I'm cleverer than you. It's because I have a strategy. I have a strategy that I nicked off Wall Street, basically. Right? My old boss taught me some of it. My mentors taught me the rest of it. And they all had something in common. They all worked for investment banks and hedge funds. And it's a strategy that retail investors don't really understand. And I call it very grandly, well, very simply, really, I call it the Wall Street protocol. Because that's really all it is. Because Wall Street literally has a protocol. And essentially what we do is we follow the money. Now, I'd love to teach that to you. Can't do that in this video because it would make this video insanely long. But what I will do, I will run a live training for you on Saturday. And there'll be a link down below this video, felixprehn.org/training. And I'm going to crack that into your brains so that you can have beautiful looking portfolios with some big winners even on a day where everybody else is crying about the stock market, because there is always money to be made in the stock market. That's my humble opinion. Right? So check that out. And then obviously get yourself a Trade Vision trial as well, because it's the best thing since sliced bread. If you want to be informed of what's going on out there, you want to get the news that actually matters, then this is your new friend. But let's go a little deeper. And if you've got no attention to span for this sort of thing, because it's a bit complicated, well, there's a free workbook as well. There's a link down below to that as well, and that'll help you understand this and help you explain it to somebody else. So first of all, Blue Owl Capital. It's one of the biggest players in private credit. And they did something they blocked investors from pulling their money out of a $1.8 billion fund. So you want your money back, they say, sorry, you can't have your money back until next year. The really scary part is that when that fund finally allows investors to get their money back, they're probably going to lose about 20% of their money. Just like gone poof, right? Up in smoke. Because the entire private credit sector is down somewhere between 6 to 9% this year. I've seen some reports that say it might be minus 22, but I'm looking more at 6 to 9. I don't mean to, still terrible, but I don't need to exaggerate things. It's scary enough. Right? And while private credit is tanking, consumer finance is also showing cracks. The American consumer is literally drowning in debt, and defaults are massive. Last year already, they were up 34%. Those are write-offs. We're seeing charge-off rates, which basically means stuff that's never going to get paid, hitting almost 5% here. That's concerning, because that's a sign that the regular Americans are struggling to pay their bills. And maybe you're thinking, Felix, okay, that sucks, but I don't really own these credit card companies or private finance, so why should I care? Well, here's the connection to AI stocks. And by the way, auto loan defaults are also terrible. AI will only work, will only change the world, and only make loads of money for the guys winning, your Googles, your Metas, your Microsofts, if the AI infrastructure gets built out. Now, that's going to take $2.9 trillion just by 2028. Now, the Microsoft, Google, Amazon, Metas can come up with 1.4 trillion of that. We have a gap of 1.5 trillion that they need to borrow. Where they're going to borrow that, well, private credit is going to fund a huge part of that. There'll be a bit of bonds, a bit of other markets, a bit of government, but private credit is meant to finance this. Now, this is not some rumor. This is what every bank in the world agrees on. These numbers are like just factually accepted by everybody else. So do you see the problem? The biggest chunk to fund this infrastructure is coming from the very people who are struggling. And Goldman Sachs people are smart enough to connect the gap and are going, guys, there just isn't enough money out there. So it's like this. Imagine building a house. The AI boom is like the fancy penthouse everybody wants to live in at the top. But that penthouse sits on a foundation, and that foundation is credit, private credit. Now imagine that foundation is cracking. Imagine it's showing stress cracks. Imagine the engineers are saying, hey, we got a problem here. That's where we are right now. Goldman Sachs are you engineers. So everyone's looking at the penthouse, admiring the view, talking about how amazing it is, but the foundation is breaking. And here's the really crazy part. This isn't speculation. This isn't me making up stuff. Meta, right? You know Meta? Facebook, yeah? They literally just secured $29 billion in a deal to borrow money to finance the data centers. Where do they get the money from? Private credit. Private credit is the thing that is under stress. It is like what we saw in 2008. So the tech companies are already tapping this fund. They're dependent on these guys already, and this sector is under stress. Now, I'm not saying the AI revolution isn't real. I'm not saying AI isn't going to change the world. It is. What I'm saying is that the funding for that revolution has got some serious problems. And if the funding dries up, the whole thing slows down or it stops. So you can have the best business idea in the world, but you can't get funding. You can't execute. You can't get compute power. Your software, well, where is it going to run? Where are you going to get the money to build the data centers? Where are you going to get the money to buy the chips? Where are you going to get the money to build the infrastructure? Well, it could be a revolutionary idea, but how revolutionary is it going to be if you can't execute? That's what Goldman Sachs is warning about. They're saying, hey, everyone's watching the AI stocks, but the real story is the funding mechanism, and that mechanism is breaking. And this isn't sexy. I get it. This isn't going to get a gazillion views. I get it. But those of you who've got the patience, the understanding of this, you're in a better position than everybody else to make decisions. Because you need to always understand the weakest link. When the weakest link breaks, what happens to the rest of the chain? So what's the outcome here? Well, Goldman's CEO, literally the CEO, not some, lowly analyst, he's saying, prepare for a correction. He's saying we're going to go down 10 to 20%. Now, if the S&P goes down 10 to 20%, you know what happens to your tech stocks? They go down a lot more. I did a video on that the other day about the concentration of the S&P. Now, he's saying it isn't going to happen tomorrow. He doesn't know exactly when. He's thinking late 26. Maybe right, maybe not. But David Solomon is someone you might want to pay attention to. And it really is all about this AI frenzy, and it is about the risk of basically not enough money out there. And then Goldman Sachs really tries to cheer us up, and they say, look, we think the stock market over the next 10 years is going to give us maybe 6.5%, maybe just 3%, right? We think that stocks will underperform bonds. Do you understand bonds? Put it in the comments if you do. Nobody does, really. Let's be honest about it. It's a boring instrument that's been out of fashion for really long times. Why has it been out of fashion for a really long time? Because we were living in a 0% interest rate world. Now we're not living in that world anymore, and it doesn't look like it's going to come back anytime. So over the last 10 years, we got 13% per year in the stock market. The stock market has been very good to us. We get a lot less. Well, what do you need to do? Well, you could be in bonds if you understand them, or you could maybe be in stocks that perform regardless of the market, right? Look at some of these guys here. I'm not promising returns, obviously, but I'm just saying there are stocks that are doing well on days where everybody else is like crying, right? Now, you might then say, well, isn't the government going to bail us out? Yeah, probably. They're going to bail out private credit if it cracks, like they bailed out the banks in 2008 and so on. But it'll happen once the stress and the pain in the market is so big that we can't bear it anymore. So they're going to do it after the stuff breaks. So right now, you're here. Warning signs. Right? Next, you're going to get some pain in the market. You're going to lose some money, and then you're going to get the bailout. And the problem is that retail usually bottles out here, and then the bailout is just for the guys on Wall Street, right? So shareholders did not get bailed out in 2008. Banks got bailed out. So you want to change your position before the crisis. You want to actually buy during the pain, and you want to benefit from the bailout, right? That's basically 1, 2, 3. Now, that's a little bit complicated. I get that. And that's probably one of the reasons you want to take your learning to the next level. Join me on Saturday, and we walk through that in a bit more detail. How do we protect ourselves right now? Well, don't be overexposed to AI hype stocks. You probably aren't too much exposed to private credit, I would imagine, right now. Consumer finance is also something we might want to be careful of. And then we might want to be in some defensive sectors. We might want to have some cash. We might want to have some quality bonds. We might want to have some quality dividend stocks. Out with a friend who's a pretty well-off individual, and he was like, we're like 60% in bonds right now. And I'm like, wow, that's quite a lot. Like, why is that? He said, well, he's got a really, really good private banker, and they're like saying they're waiting for the correction, and then they're going to sell all the bonds in the correction or the profit, and then they're going to buy stocks. That's what they're waiting for. That's what the smart money is doing. I'm not telling you to do that, but I'm just saying that's what they're doing. Why is they doing that? Why are they doing that? Because they've got the advance warning from people like Goldman. They're giving you warnings to prepare. Not to you, they're giving it to their Wall Street chums. I'm sharing it with you so you're not left out. Now, if you bought bank stocks during the 2009 collapse, you made 10x returns. I didn't buy bank stocks back then. I bought bank debt back then. You did tremendously well, right? Mentors, got insiders. In 2020, if you bought quality stocks at those 30 to 40% discounts, you doubled or tripled your money. What about now? Well, you want to prepare. So you can buy during the panic. You want to be positioned for the next cycle, but you also don't want to be entirely in cash because inflation is gonna have you, right? So my goal here is not to scare the bejesus out of you. My goal here is to show you is a genuine warning from the smartest minds on Wall Street. And I appreciate most people aren't prepared for what's coming. So there are levels to this. How you prepare yourself. I've given you access to some on a higher level. But if you want to dive deeper and you want to really understand how do we position ourselves in any market? How do we make money if the market keeps going down? How do we make money if the market rebounds, right? Then come and join me on Saturday, live, unadulterated, felixprehn.org/training. Sign up, it's free. Make sure you're on time because we do fill up. And don't ignore the warning. Don't just say, oh, it'll be fine. That's what people always said. What people said in 2007. That's what people said in 1999. It didn't turn out that way for a lot of people. And then those people had to work years longer often or cut back their retirements to a level they didn't really want. But also don't panic. Don't watch the doom and gloom all day long. It doesn't really help. Watch stuff that actually teaches you things. Watch stuff that elevates your skill level. To me, that's what this is all about. If you got some value out of this, go and grab yourself your free seat for the live training. And secondly, get yourself some good news. And we put out on Trade Vision only the news that moves the market. If you want to see the key news here, literally the key stuff on the big S&P stocks, say, or on the big NASDAQ stocks, or on any one of your watch lists. So say, if I look at my watch list and I just want to see the news that impact what I'm holding, like I hold Kroger and Johnson & Johnson right now. So I know C and B, IB, and I can now see like what's going on with those stocks, right? I can just see that. I can also see, well, how do those guys perform, right? This was that portfolio yesterday. Now there's a little one winner down here. That was actually the really good one. VRA up 17%, but that's a tiny stock. So let's make that mono size. So here you go, right? You can see that portfolio. So now I've got my portfolio. I see how it's performing. I've got all the news for that portfolio live, and I can get live notifications for those stocks. I just toggle on my mobile alerts. You see that here? Just toggle that thing on there. And then I'm going to get them on the real time. And therefore, I will be the best informed investor out there, and I'll see the stuff as it happens when it happens. It looks just like that. You see that? That's how it pops up. Not for every stock in the world, only for the stocks that I select, only for the stocks that I care about, only for the important stocks to me. So you can get that at felixprehn.org/tradevision. And I wish you a fruitful week ahead. All the best. Remember when I told you about CTKB stock on November 14th? Well, that stock rallied an entire 24% in just 2 trading days. Now, I'm not promising that will happen with